Hi everybody, Jeff Yasteen here. Make sure to subscribe to our YouTube channel, and also of course you can follow me on Twitter and on Facebook. Well, I want to show you what I'm calling my chart of the week, and I think it's pretty important. Before I show it to you, I will tell you that it has nothing and everything to do with the upcoming election, the pandemic, and the current state of the economy and our stock market. But I want to bring it to your attention because it has me deeply concerned. Now, the stock market throws out lots of what we call false positives, signals that we think are important, and yet much of the time you could have ignored that signal and done just as well or better. But if you've ever gotten caught in a sharp correction or a bear market that sneaks up on you, you've probably wondered, how come I cannot get a warning ahead of time? Well, this is a warning being sent to us by the current stock market. This is a look at what's called the put-call ratio. Most of you are familiar with options. If you're not, a put is an options bet that a stock or index will go down. A call is a bet that a stock or index will go up. As investors become ever more bullish or ever more bearish, they buy options accordingly. So I want to draw your attention to that red circle on the far right-hand corner. That's where we are right now. And as you can tell from the chart, there are only a handful of times in the past 13 years that this chart goes back to that investors have been so bullish. As you can tell also from the chart, in just a little over 6 months, we've gone from a period of historic bearishness back in February as the pandemic set in and everybody was buying puts. And now we're back here at historic bullishness where optimism reigns and investors feel increasingly bulletproof. Now, these are dangerous signs, though not foolproof. Does it mean that the stock market has to go down or go down anytime soon or go down at all? No. If you track a ratio like this one, you'll see that in previous extremes, the level of call buying at market tops and conversely, put buying at market bottoms, it can go on for weeks or months. So there's really no timing element to this. If the major indexes move sideways for weeks or months, that too can also drive the put-call ratio to a more moderate level. There's also nothing saying that the stock market could not go parabolically higher from here either. That's exactly what happened in 1999. I remember it well when the NASDAQ soared between mid-October of that year and mid-March of 2000. So no one rings a bell, heralding the end of one market trend and the beginning of another. It's left up to us as individual investors and speculators to basically place our bets accordingly. And that's why I want to show you this chart. If you're long a lot of stocks, to me, this chart is telling us to be cautious. That's my opinion. For me personally, I'll look at my newest positions. Are those positions working? Are the stocks holding their own? Are they going up in the current market environment? If my answer is no to that question, then I'll give serious consideration to easing out of that stock. I'm making a bet, which you may or may not agree with, but I would rather take a small loss now rather than risk being stuck with a bigger loss later while waiting and hoping for that stock and the market to turn around, especially at a point like this where we do have elevated risks, in my opinion. The other thing to think about here is cash. Inevitably at market tops, optimism reigns. No one wants to miss out on the next move higher. So we all tend to be fully invested with little or no cash on the sidelines in our accounts. If we have a $10,000 portfolio, all $10,000 is in various stocks. If it's $1 million portfolio, again, it's all in stocks. So when a downturn finally arrives and the market falls, many percentage points lower, we wind up having no cash to buy, some great bargains, unless we want to sell some other stock or stocks in our portfolios. And of course, at that point, we're doing it at a big loss. The toughest part about the stock market is dealing with uncertainty. It's unrelenting. Most of us don't like the idea of risk, and the put-call ratio is telling us that the risks of a sell-off are high and rising in the stock market. If you like what I'm talking about, just remember to keep all this in mind as you subscribe to our YouTube channel. And again, follow me on Facebook and on Twitter. I'm Jeff Yasteen.